Everyone needs to insure their homes and their cars, and oftentimes insurance companies are not liked very much. Now, I happen to like insurance companies as an investment, and the reason for it is that they tend to make a lot of money and they tend to pay really good dividends. I'm a stockholder in Allstate, and I wanted to update my analysis and share with you what I intend on doing with this stock. If I'm going to buy more shares, just hold, or sell my shares in Allstate. Allstate is probably really well known because they have good commercials. They tend to be funny. But overall, they're a big insurance company headquartered in Mid America, Illinois. And they had a couple of rough years 2 years ago, but they got their business right. And now premiums are higher and profits are also higher. The company is generating really good cash flow. So I'm glad that I'm a stockholder. It's been a good performing stock so far. But what does the future entail? Let's take a look at their fundamentals, take a look at their Q1 earnings, and then I'll make a decision whether I'm going to buy, hold, or sell Allstate stock. Before I jump into the fundamentals, let me remind you I'm an individual investor and I'm an investor in Allstate. I'm not recommending that you buy or sell Allstate stock, and I'm not providing any financial advice. I just like sharing my journey as an investor on YouTube. So let's take a look at the fundamentals. Allstate's a $44.6 billion company. Not the biggest company, it's just a good sized company. And their revenue is $58 billion. So you're paying less than one time's revenue for the company. Their forward PE is really manageable at 11.65, and they pay a 2.18% dividend. Not a really high dividend, but I think it has more to do with the price of the stock going up. It's really reduced that dividend rate. A lot of analysts cover this stock and they have a buy rating and feel that it's fairly priced. The current stock price is $169.08. The performance of the stock's been really good. Over 1 year, it's gone up 44.5% and it pays that dividend. Year to date, it's up 20.49%. That's really nice. So it's been performing for the last 12 months and it's been performing year to date. The company, as mentioned, had a couple rough years, but it really straightened out their business. They're really growing nicely, and we're going to look at Q1 earnings. But for 2023, they grew their revenues by 11%, which is really good. And when we look at their free cash flow was $3,988,000,000, which is really good. I'm going to use free cash flows to value the company based on free cash flows, and I'm going to use earnings per share to also value the company. From an earnings per share perspective, as mentioned, 18 analysts cover the stock. They have a buy rating on Allstate and feel that it's only 2% discounted. The earnings per share look really good. For 2024, it's expected they're going to produce $13.01 in earnings. It's going to grow quite a bit next year by 30%, then 18% in 2026. So earnings per share looks really good. I'll use that in my valuation. Their balance sheet looks good. Their debt to EBITDA ratio is right at 3, which is the maximum that I like to see with regards to the level of debt compared to their EBITDA. And I think it's going to get better. They had a subpar year in 2023 and 2022 as it relates to profitability. But in 2024, they're going to be really profitable. So the ratio should get even better on the debt to EBITDA. The company announced their Q1 earnings on May 1st, and there was some good news in the report, leading with revenues grew 10.7% in that quarter compared to the year prior. It's very good growth. Overall, the company was profitable with very good earnings per share in the quarter. They generated more cash flow than I expected the company was going to produce. So I get to increase the amount of free cash flow that I'm going to put into my valuation. And the earnings per share has been moving higher. Two really good trends for Allstate. I'd like to value Allstate using their free cash flows and their earnings per share. Starting with free cash flows, the company is doing really well, and I get to move up their free cash flows I expect. In 2024, I expect they're going to do about $5.1 billion of free cash flow this year. I'm going to grow those cash flows conservatively 4% a year for the first 4 years and in terminal value, all years after year 4. That produces a forecast of all the free cash flows I expect the company is going to produce. I'm going to have a discount rate on Allstate of 9%. And using those figures, I get a net present value of all those cash flows at $95 billion. I'm going to add the cash on the balance sheet, which is $850 million, take away debt, which is $7.9 billion, and get to an equity value of $88 billion. The market cap is only 44.6, so there's about a 98% discount if you compare the value of those cash flows compared to the market cap and stock price of Allstate. That's a really big discount. Looking at earnings per share, their earnings per share is expected to be $13.01. Their forward PE at their current stock price is just under 12. I'm moving it to 18. If they're growing, profitable, momentum stock, it deserves an 18 in my mind. And I'm going to grow those earnings per share just by 10%, even though it's forecasted they're going to grow much faster than that. Using those figures, I get a stock value using earnings per share of $257 per share. But the current stock price is 169. So using the earnings per share method, I get a 52% discount. I blend the two methods using free cash flows as a greater weight on that valuation. I get an 82% discount. That is a big discount on this company, but it's just driven by fundamentals. They're creating more cash than I expected. They're more profitable than expected. So my valuation has increased and it's showing a really big discount on Allstate. Allstate's been a really positive performing stock in my portfolio. Should I buy more shares, hold, or sell my shares? Let's take a look at the company, the balance sheet, and the discount. The company. I really liked the company did the right things to repair the business and really get back on track. Really shows this management team really knows what they're doing. And I really like the insurance business. The insurance business is very lucrative, where they get to collect premiums, have those premiums in hand, invest them, make money on the investments, and then pay out on claims when needed. Overall, I love the business. Warren Buffett's a big insurance fan as well. No big surprise. So I like the business. I like the management team. I want to be a part owner in Allstate. The balance sheet is in good health. The debt to EBITDA is at 3, and I think it's going to get better. So I'm very comfortable with the balance sheet. The discount is really good. It continues to be very discounted, has very good momentum. The stock's been really going up over the last 12 months, as well as year to date. So I'm going to keep buying shares of Allstate, and I'm going to buy big. I have about a $20,000 investment in Allstate, and I'd like to increase my position to arrive at around $50,000 in this position. I hope you found my video interesting on Allstate, and I really appreciate you watching.